If you are a young person, you may be wondering, how can I maximize my retirement savings? Well, you are not alone. The average 401k balance amongst all Americans is only around $132,000. The recommended goal for someone making around $60,000 per year to retire is about $700,000, which happens to be close to 3 times more than the average of Americans in their early 60s today. Not ideal. From a young age, we have all been hammered with the concept of saving for retirement via maxing out your 401k match from your employer. However, with the new opportunities brought forth via cryptocurrency, many young people are wondering if they would be better off just leaving behind their official retirement plan and instead investing directly into crypto. I just so happen to be one of those crazy young people who did just that, and my results over the last few years have been pretty remarkable. Therefore, is this something that young people should consider? Let's dive into my thoughts and perspectives. Remember, this is not financial advice. Since crypto is a fairly new asset class, let's use the last 5 years as the basis to measure returns. According to the Motley Fool, over the last 5 years, the average 401k balance returned an average of just over 7%. For the sake of simplifying crypto, we will solely look at Bitcoin as it tends to be the safest option for crypto investors. Over the last 5 years, Bitcoin has returned an average rate between 40% and 155% annually, and this largely depends on what you use as the starting base. For the sake of this video, we will use the low end of the spectrum to be conservative. Now, looking at the raw data, it is clear that Bitcoin has been a superior retirement strategy over the last 5 years versus the average 401k portfolio. However, what needs to be taken into consideration is the fact that many employers offer a match on 401k investments and sadly do not offer a match on self-invested retirements. Depending where you work, the structure of this match will vary, with the majority of employers offering only a 50% match. However, for the sake of this video, we will compare both 50% matches and 100% matches. This takes us to Exhibit A, the most common 401k structure, a 50% match on up to 6% of your salary, yielding a 3% employer match. For the sake of ease, in all these examples, we will assume a yearly salary of $100,000. Therefore, $9,000 divided by 12 months takes us to $750 per month. Plugging this into the nifty interest calculator at calculator.net, we come to the following outcomes. In 10 years, you would have around $129,000. In 20 years, you would have around $383,000. In 40 years, aka when you are likely ready to retire, you will have a whopping $1.864 million. Not bad, at least in today's terms. However, how far will this actually get you in 40 years? Well, assuming the last 40 years of price increases repeat at the same average yearly increases, we will see the average price of a home increase by 4.25% each year, coming in at $2.293 million. The average cost of a new car increasing by 4.23% each year, coming in at $247,000. And the average price of a gallon of gas increasing by 2.63% each year, coming in at $8.95 per gallon. All of a sudden, $1.84 million doesn't sound as great anymore. Yikes. Let's run the same example for someone with a generous 100% 401k match on up to 6%, which tends to be about the best you will find. Combining personal and employer match contributions, this employee will wind up investing $1,000 per month, which is considerably higher than the $705 per month contribution that Vanguard said was the average in 2023. For this employee, in 10 years, they will have $172,000. In 20 years, they will have $510,000. And in 40 years, they will have just shy of $2.5 million. Nice. Now, let's look at Bitcoin. In both examples, the employee received their maximum match by contributing $500 per month to their account. Using the conservative 40% return rate over the last 5 years, we wind up at $505,000 after 10 years, $15 million after 20 years, and an almost unfathomable $12.6 billion with a B after 40 years. Holy smokes. Although the 40% growth number has been on the lower end of the spectrum, let's be extra safe and assume only a 20% annual growth rate. In 10 years, $172,000. In 20 years, $1.24 million. In 40 years, still a whopping $48.7 million, or around 24 times more than the average 401k portfolio. Interesting. So, the big question is, what might your traditional 401k cost you? Well, personally, I abandoned my 401k back in March of 2023 using the Bitcoin dollar cost average calculator. Over the course of 2 years, plugging in the same data from these examples, my average total return on investment has been 159%. Not bad for 2 years. If I was in my traditional 401k plan at the max match, which was around a combined 70% at the average growth rate of 7% yearly, I would still have less than I made going all in on Bitcoin. Now, this is obviously my personal testimony and your results may vary. Hopefully, this video helps turn the wheels in that giant brain of yours. The truth is, when planning for retirement, it isn't always a one-size-fits-all. Going all in on Bitcoin may seem too risky for some people, and that is okay. Sometimes diversifying is a great plan too. However, just make sure when you are calculating projected returns and dollar amounts, you don't forget to account for inflation. $1 million is a lot of money today, but given the way things are going, will likely be worth significantly less in 40 years' time. Don't work hard just to get to the finish line and realize you picked the wrong strategy. Cheers.